Well, good morning, everyone. Welcome back to our trading room. Hang on here one second. I'm going to get you my monitor. So I'm having a little trouble with my computer this morning. My chart, or one of my charts that I'm trying to load, is taking an awfully long time to load. So hopefully it will sort itself out very quickly here. Otherwise, I may have to try to reboot. And hopefully it won't come to that. Oh, come on, computer. So until it does that anyhow, it's not going to let me do anything. Here, let me try this. Maybe I can stop the program. Fire up the old task manager. Maybe I can just kill that particular chart. No, it's still not letting me do that. Well, it looks like I'm going to have to reboot Ninja here, so bear with me for a few moments. And hopefully, I'll get it right on the second try. I hope my computer's not starting to pack it in. Ooh. Well, this is one way to avoid opening range, isn't it? Come on. All right, so we got the data turned on. Let's open up our workspace. Yeah, thanks, Tony. Tony's casting a spell for my computer to work. It's been a great computer, too. Touch wood. Nothing special. People sometimes ask me, Eric, what kind of trading computer do you have? Honestly, I just go to the computer store and I buy the best computer I can with the fastest video card. I think it's the video card that's important for this type of work. Come on, last one. There we go. All right, let's see if I can get the trade manager to load properly. And computers are great so long as they work. And when they don't work, they can be incredibly frustrating. As I'm sure you all know, I'm going to try loading my trade manager this way. Usually all you need to do is open up your window, click OK, and it will automatically load for you like that. But I'll try applying it first and see if that makes a difference. Okay, now on the other monitor, so far so good. looks like we're off to the races. Okay, so let's take a look here at what's been going on with the NASDAQ. Friday session, even though I wasn't able to host it, looks like it was a pretty decent day. The market had a very nice upward progression, a little bit choppy through parts of the morning, but for the most part, just a nice steady uptrend right out of the opening bell. And here we are right now. So the market's looks like it's reversed on itself a little bit. And now we've got a little bit of sideways action going on here. So when the market starts to look like this, your charts, especially on the Eagle, don't have that nice smooth up and down progression. Your filter is breaking up. Then that's usually a clue that you're in a little bit of choppiness. Even though the trade forecaster says we're currently in trend mode, the trend doesn't look like it has kicked in just yet. So we've got a whole lot of overlap going on there right now. Okay, I'm going to try to load my trade manager on my gold chart now. Wish me luck, because this is the one that locked up the last time. Uh-oh. Oh no. Oh, nuts. It doesn't seem to like the gold market. All right, so a little bit of a rally now. It looks as though we may have been trading into that opening gap. There was a small opening gap. Remember where we saw the market leave off from Friday's rally? And so here we are starting the day with a little bit of a move into the gap. That's my gold chart won't load now. And that's going to make it impossible for me to use my other charts. Okay, I got it to work. Took a little while, but it's behaving now, so just a couple more clicks here and I will be all set up. Okay, all that housekeeping's done. Oh, good morning, Jim. Jim giving us some advanced decline numbers here this morning. Looks like we have about 540 on the buy, 2100 on the sell. But remember, we had that bit of an opening gap down, so that's going to skew those numbers somewhat. All right, so big move up, and now here they come with the move down. Still looking for a little bit more structure here before we get too crazy. It looks like there was a little bit of a scalp here on the first micro-macro cross signal on the hawk. It would have been a bit of a nail biter, but I'm pretty sure you reached your profit objective. Yes, you did. And then the market did a full-on reversal. Let's see, is that a first micro-macro cross, or is that not in sync yet? Oh, it just synced up. So this signal here was also a first micro-macro cross to the downside. Just looking to get a little bit of traction here. All right, so not the best structure. So what you're seeing here is we've got a cloud crossover here now on the Raptor. No real test of the extreme. That's a little bit of a concern. And here comes the test of the extreme. Chart's very active this morning. But it is Monday morning, isn't it? So that's to be expected. A lot of trading related news hitting the floor. All right. Looking like a little bit more structure here now. We might get something tradable in a little while. Jim asks, Eric, well, first Jim says, the Russell's the weakest, the DAX, the bank index, the transports, and the YM all look the same. So it looks like things kind of flip-flopping here a little bit. I'm also watching gold and crude oil. Gold very neutral at the moment, and crude oil looking like it's sitting on the edge of a cliff. I can't believe that it would want to head any lower than what it is. Jim asked, Eric, did you ever buy the Ninja platform or do you lease it? Well, truth be told, Jim, it's one of the perks for being a professional in the industry is they comp my Ninja lease. So like I said, it's a little bit of a professional perk. But if I had to, I think I would probably go with the lease program. It seems fairly reasonable to me. Nice thing about, well, nice thing, it's not a nice thing, but it is a legitimate tax deduction. So make sure you bring that to your accountant's attention when he's doing your income tax at the end of the year. All right, so we're still flip-flopping here. I'm thinking we're going to see the market head lower a little bit. We've got a little bit of a test of the extreme going on right here. And the makings of a rule of three signal in the eagle. Now what I'm going to do is I'm just going to throw an entry order down here, and then I'm going to get to Mo's question because Mo has an excellent question here. Mo asks, Eric, wouldn't you get more buy-sell entries with 4 ticks versus 6 ticks? Yes, absolutely I would, but that's not always a good thing, Mo. And let me explain why. And some of you who have heard me go down this path before, you may want to go grab a coffee. Okay, so first with the signal here, we've got the makings of a rule of three. The rule of three on the eagle happens when we're starting to generate counter trend signals against the band. The band right now is bullish. We're generating sell signals. We have had the test of the extreme. That's the all-important component to this rule of three type scenario. You can see we're working on another signal right here. I've shot a trend line across the lows. I'm thinking I'm going to try to enter below the trend line. I could even enter below this swing low. That's another way you could set it up. Because we don't have the whole rule of three yet, you could enter right there and enter on a break below that swing. So that's an alternate entry. That's probably a little safer still. Okay, so now to get to Mo's question. Oh, here we go. There's our third signal, technically also the trend change signal. All right, so Mo asks, well, you know, our settings are 6 and 8 and 12. Wouldn't we get more signals if we made the settings lower? And yes, we would. But more signals is not always a good thing. What you want is you want high probability signals. You see, a lot of people think that trading is like everything else in the world, where if I need to make more money, I need to trade more, right? If you're a widget maker, you make more money by making more widgets. Make more widgets, sell more widgets. You know, it's all about production. Trading is not that way. Because in trading, unlike widget manufacturing, where you have a pretty good idea if you can produce 100 widgets instead of 50 widgets, you can probably sell all 100 widgets and make more money. In trading, because we're dealing with future events, it's not always certain, right? So even though we have our high probability signals that we look for, the probabilities actually decrease the more you do it. I'll let that sink in there for a moment. It's because a lot of people never consider that trading more often may actually result in less money. What you want is you want to focus on, you know, a high probability signal like the first micro macro cross here. Are you going to get more first micro macro crosses if I change from 6 to 4? No, probably not. It may trigger a little bit earlier. It may trigger like a bar or two earlier, but you're still only going to get one first micro macro cross. Are you going to get more macro pullback signals? Well, there is a chance of that. See this bar right here? where we had this little bit of a wick lower. On a 4-tick bar, this may well have been a macro pullback signal. But look at what happened. The signal failed, right? It went higher instead of heading lower. So a lot of testing went into these charts to come up with these parameters. You're welcome to change them, of course. After all, it is your money. If you find that you're getting better signals off of a 4-tick chart, then by all means, use a 4-tick chart. But I would discourage you from trading more. The way you're going to make more money is by finding a high probability signal and capitalizing on it correctly. So by that I mean, whereas you may have the production mindset where, okay, I'm only going to use one contract and I'm going to try to trade 6 times a day or 8 times a day or 10 times a day, whatever the case may be. What you really want to do is you want to look at perhaps going in, well, I can't do it on that one, but let's say perhaps going in and using, you know, your risk component here, risking 2%, here's a macro pullback signal, and notice, you know, if I put my stop here, my risk is $255, we'll say $300, with 3 contracts. If I do that same trade and I place my stop above the swing high, oh, it's still about $300. But now I'm trading 2 contracts. So you see, I'm keeping my risk the same. So a little bit of rounding error there. Let me go a little bit higher. So we're still about $300, but now I'm down to 1 contract. The risk amount stays the same, but what changes is my position size, how many contracts I have on the profit side. I hope that makes sense. It's an important concept. You don't want to necessarily trade more often. I always tell people you should take a quarter, flip it, and see how many times you can toss heads in a row. That's how many times a day you should trade. Now, I've tossed heads, I think, 6 or 7 times in a row. But more often than not, well, there's been times where I couldn't toss anything but tails. But usually, you'll end up tossing heads 2, maybe 3 times in a row. And trading is, in a lot of respects, is similar to that. All right, so we just broke a little bit of a bearish trend line here. We should see at least one more move lower. Oh no. Tony says he was watching crude oil. He had the order all pegged. Yeah, I should have thrown this one in too, Tony. He's watching crude oil here. This green bar sell took a long time to mature, but it finally went, but he forgot to hit the submit button. I know, I hate it too. I wish I could say I've never done that. All right, so we're still flip-flopping about here a little bit. One thing about the rule of 3 signal that I should point out is it is technically a counter trend signal. So you don't need to rush into it. It's kind of like the red bar buy and the green bar sell that we see in the hawk. It tends to develop near the end of a trend. So if the trend is truly turning over, then we should get a with trend signal here somewhere along the way. Right now, as You can see though we're getting a whole lot of this overlap continuing. We're still very, very sideways. Just looking for the sellers to step in here one more time. And try to send the market lower. At which time I'm going to become a lot more aggressive with my stop. Let's see, what do parabolics look like? Too far away. Bar high low, yeah, that might be it. Come on, sellers. Crude oil doing a little bit of an about face now. Nothing too terribly serious just yet, but here we are, crude oil on the Falcon, came down, tagged our support line, almost on to the number, to the tick, and now support is coming in, so prices fell off very quickly. It's a little bit too early to tell if it's a full-on reversal yet, but don't be surprised if we get a trend change signal here and watch crude oil buyers step up and try to test the top end. That's what I'm going to be looking for. Still too early though. Don't be just buying crude oil. Everything's kind of going sideways here right now. So we're getting a couple signals here on the hawk. Technically, first micro macro cross right here. The problem though is, you look at the market and it's very sideways, right? It's kind of flat here at the moment. You need to remember to take your signals in context also. I'm not saying it's not going to go higher. I'm just saying you need to pay attention to these things. All right, so we finally got some sellers stepping in right near these old highs. All right, so there's my recommitment on the part of the sellers. I might as well start rolling my stop. After all, if the buyers take the market away from them at this point, then I may as well go. May as well reduce my risk at least a little bit. Technically a green bar sell. It's against the ATR line. Oh, and that reminds me. Randy mentioned this ATR line, Eric, is pretty hard to see, so I will make it a little bit darker once we're finished with this trade. Notice I'm rolling my stop a lot more aggressively. Hopefully the sellers keep control here and the buyers don't get to look too far back. Come on, sellers. Knock them down. There we go. Come on. So this low right here, obviously going to be a little bit of a troublemaker. This is where the buyers stepped in before. You can see the buyers trying to fight the market up a little bit. We'll see whether the sellers take control. This is going to be a very important bar for this particular trade. If the sellers hold them down, come on, take out the low. So it looks like the low is 42.34 to the number. So we need to see somebody trade 42.33 3/4, and we'll be on our way. So here we are, 42.34 half. Come on, somebody give me the half. Come on, sellers. There we go. There's 34. There we go. 33 half, 33 quarter, 33, 32. Come on, you can do it. All right, so they're getting close enough here for me. I'm going to force my trade to break even now. The reason is my entry was a little bit late also. So had I taken this green bar sell on the hash mark, I would probably be at my profit objective already. Of course, I took this signal back here. How are we doing with open profit? I'm tempted just to grab that, you know that? Show me 110 again. There we go. You know what? I'm just going to take it. It's probably going to tail off here and hit my profit target. See, there you go. It's on its way. I was a little bit of a chicken on that one. It was bouncing around a little bit too much. $100 sitting on the floor. Yeah, I'll stop and I'll pick it up. Not the biggest trade, but hey, you know, given the way the market was chopping around this morning, I'm okay with it. And we'll see here in a moment whether that was a good call or not, if the market's going to back up on me again. Oh, yes, and here, I was going to darken my ATR line for you. So it's easier to see. There we go. And I'll save the template. There. So that should be a little easier for you. Mo asks, Eric, on the crude oil chart on the Hawk, are those red dotted lines support lines? Okay, I'm not sure I brought over a crude oil Hawk chart yet, but just in case. So the red dotted lines, are you referring to the macro line? Probably not. I have a feeling, Mo, you're asking about the Falcon, where I have the support and resistance suite. It's the same as this Falcon here. I've got these lines that you see on here. This is the ultimate support and resistance suite. This is an add-on. And yes, it's forecast the support and resistance lines for today's trading. The gold line is your median line, and then you've got primary support and primary resistance around the median line, and now we've got the secondary support lines. And they are not pivot points, and they are not Fibonacci retracements. Oh, interesting. Mo says, at the lows of both the NASDAQ and crude oil, I have red dotted lines near the bottom. Oh, I know what it is. Yeah, okay, hold on a sec, Mo. It probably looks like this. Come on. There, probably looks like that, doesn't it? Yeah. Mo says, yep, they look like that. Okay, what that is your opening day, or pardon me, your current day open, that's the gold line, the high and the low. I think the reason they include this is Ray Burke was always very careful around the Globex Open. I don't know why. I guess Ray just got stung too many times taking a trade around the opening price that he avoided it. Personally, for me, Mo, I find this distracting because people always ask, well, I guess right here is the best place. People always ask, will you take a signal into the low of the day? Or will you take a signal into the high of the day? Sure, why not? Why wouldn't I? So that's what those are. They're the current day open, that's the gold line, high and low. For me personally, they don't help me make a decision, so they're gone. Anything you put on your chart should only be there to help you make a decision. Nothing more, nothing less. Now, the nice thing about DTS is it's robust enough that, you know, if you want to run whatever, MACD or RSI or whatever kind of indicator in conjunction with this, you know, by all means, go ahead, throw it on there. But only if it helps you make a decision. That's always the final criteria. Yeah, Tony says, is there an indicator that makes me make the right decision? Yeah, I know. If only. Floyd, good point. Floyd says the Fed is speaking later today. Do you think that's why it's so slow? Without a doubt, yes. It looks as though traders might be expecting, I don't know, maybe a little bit of bad news. The bias, if anything, has been lower. But yeah, if the Fed is speaking this afternoon, that will definitely put the NIX on the market this morning. Baz says, looks like crude oil might be heading higher. Let's take a look here at crude. You could be right, Baz. Couple of bounces here off the primary support. Working on a possible trend change signal. Technically, we've got a double dot counter trend signal. I'm not going to be too anxious to buy it just yet, but I agree with you. It looks like we've got a little bit of a bottom coming in here, right? Once we get this whole retest thing of the lows going on, now they're trying to retest the highs. Why don't we just watch this chart for a little bit, and let's see if we can't get a feel for who is in control of the market, the buyers or the sellers. This is always what we're after as traders, is to see, are the buyers in control or are the sellers in control? Well, the first thing you need to do is you need to look at the overall context of the chart. Where has the market been relative to where they are now? And it looks like the whole session, more or less, has been very, very choppy, hasn't it, for the last few days? If anything, the trend is mildly bearish. So it looks like the sellers have a little bit of control in the market. So here are the sellers. Recently, they pushed the market down. The buyers dug in here. Here come the sellers again, or pardon me, the buyers. And the sellers draw the line in the sand right here, and they start pushing the buyers lower, 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 and the buyers say, oh, no, you don't. And they draw the line in the sand right here. So now the buyers start to push, and now we're on the lookout to see what the sellers are going to do. So right now, they're right back up here at an area which we know is very sensitive for the sellers. And they're going to try to push the market down. And if they can, then we would expect the buyers to force the market back up again. And that's how we end up getting our trend change signal. The trend change signal where we go, trend line changes color, here's the up, here's the down, here's the up, and our signal. That's exactly why this unfolds this way. So the sellers have control of the market, the buyers are fighting for control. The sellers are trying to take control back, and now the buyers are going to reveal their hand. The buyers are essentially going to show us whether they're strong enough to take control of the market or not. Are they going to overwhelm the sellers at this point and just continue to rally higher? Or are the sellers going to dig in enough to force the market down at least a little bit and make the buyers step up again? So that's what we're looking at right now. It may take a little while to unfold. Yeah, Baz is saying I might go long if we get signal from crude, and it's looking like it could be a solid signal too. So we saw the bar turn red there for just a moment. We don't have the full-on structure yet, at least not on the Falcon. We're just watching the Falcon here. We may be getting, looking at the Hawk. No, we don't have a signal in the Hawk just yet. And we're right into the hard edge on the Eagle. The Eagle band, which is currently bearish. Well, here, why don't I bring it over? The Eagle band, which is currently bearish, you can see we're right into that hard edge. Okay, so here come the sellers. Here they come. The sellers are saying, yeah, we're still here. We're still strong. And now, what is the seller's objective, folks? Class, what is the seller's objective at this point where we're at? What do the sellers want to do? Where do we think prices are going to go? Anybody? If you were a seller in crude oil, if you were short crude oil, where do you want it to go? You're up here, you're shorting crude oil like crazy. Where do you want it to go? Yeah, that's right. Tony's got it. You want it to go down. You want it to go at least down to these lows and possibly even lower. All right, looks like the buyers are trying to step in there a little early. We may not get a signal here. The buyers are starting to overwhelm things. Yeah, Sammy, you got it. You want the market, if you're a seller, you want the market to go down. No, they may not give us a chance here. The buyers are a little bit stronger, or looking a little bit stronger, pardon me, than I anticipated. Hopefully they'll come down here and give us a proper signal just so I can point this out to you. But this is the ballet that happens time and again. No, we're not going to get it. So the buyers are extra strong. The buyers came up here and said, oh no, we're not even going to let the sellers take it down here. We're going to take control of the market right here. And now they're going to try to force it higher, of course. And they're going to try to force it at least to these highs up here, or perhaps even the resistance line around 32.52. But you see, this kind of thing happens all the time. And once you understand that, you know what to look for. And you can watch this little balancing act that goes on. And you can understand who is in control of the market, the buyers or the sellers. Don't just blindly go on the signals. We refined the signals the best we could so that you could say, oh, first micro macro cross, I'm going to buy. First micro macro cross, Eric says buy it. Okay. Go for it. But, you know, once you understand what's going on, once you understand the struggle between the buyers and the sellers, and you understand how to see that struggle, then it, you know, makes it easier to pick out the trades that are really higher probability. Oh, it looks like I may have been a little quick with the crude oil. The sellers stepped in a little bit later, so the sellers said, okay, here we are. We're right up here now. And now the sellers are going to try to force the market down. I'll tell you one thing, it's easier when they respect these price zones a little better. When they start fudging the price zones, then I wonder whether the sellers are playing possum. If they're just going to let the buyers get up here so that they can squash them, you know, fill a bunch of buy orders and then just knock them down. But the sellers, regardless, they've tipped their hand there. That's where the sellers are prepared to let the buyers get and no higher. So now we're working on our trend change signal. We'll see whether the buyers are in fact as strong as they made themselves out to be. All right, so here come the sellers now, and let's see where the buyers choose to dig in, if they choose to dig in at all, or whether the buyers were just running on vapors when they took out this little high here. I suspect they weren't. I suspect the buyers are a little bit more serious than they're letting on. And sometimes it's a waiting game. You know, like look at how long you had to wait through here. You had to wait like a half an hour to see who was controlling this market, the buyers or the sellers. Oh, actually even longer, about an hour if you started following it from back here. But the same little balancing act, The same little dance happens time and again. So we're working on a trend change signal, and now you understand why. This is why we look for these things in the trend change signal. So here's the up, here's the down. We're looking to see whether the buyers give us another up, at which time we could consider a buy. So here they are, look at this. The buyers are starting to show up early, which is what we would anticipate if they were truly strong. In fact, I could even set up to buy above the high there. Just anticipate. See, here they come. So here come the buyers. And now things get really interesting because it's put up or shut up time for both sides. Are the buyers really strong and are they going to rally the market? Or are the sellers going to take control of the market and force it lower again? They've worked themselves into a tight little corner and somebody is going to come out of here ahead. They don't have a choice. So we've got the warning dot. See, the sellers are starting to beat up on them a little bit. And here they come. Here come the buyers. So I'm just anticipating my entry via my logic counter and the high. I would definitely be interested in entering above the high, not really earlier than that. See how the sellers are coming back here? So we know there's active selling going on here. They're not letting it go. This is exactly what we want to see. This is how I said we've watched them work themselves into a corner. And now somebody's going to come out ahead here. It may not develop into a major trend, but at the very least, I'm hoping that we can at least find our profit objectives. Boy, they're taking their time. Baz says, I'm looking at 32.69. What do you reckon? So you're looking at 32.69 as a profit objective? Yeah, it's possible, I suppose. The thing with profit targets is they're very difficult to forecast for obvious reasons. Nobody really knows where the market will go. If anybody does tell you they know where the market is going, I'm pretty sure they're a liar. We all have our guesses, and the thing about trading is it's essentially a 50-50 proposition. So some guys can make themselves to look like rock stars, but really nobody knows the future. What I can tell you, though, is that this market is worked itself into a tight little corner. If it breaks the highs, it's likely to go higher. If it breaks the lows, it's likely to go lower. That much I can tell you. I can tell you the buyers have committed to the market right here. Sellers have committed to the market right there. The problem with this market right now with crude oil is the lack of direction, the lack of trend. I suppose if anything, the trend you could say is down, but the market is very, very choppy right now. It's not really flowing like we might like to see it. Kind of busted this trend line here a little bit, and that usually means I will see at least one more press lower. Not always, but usually. Remember, in trading, there are no absolutes. We shoot a trend line across the lows here. It looks as though we're starting to wedge up a little bit, maybe. All right, so they're still sorting themselves out. Still no signal. All right, so you see right now the sellers are pressing harder. We'll see where the buyers decide to show up, if they show up. Still getting a whole lot of sideways trading going on here. You see this? That is tough trading, folks. So if you're looking at your chart, you know it's going to be an easier day trading if you're looking at your chart and your prices start in the top left and go to the bottom right, or they start in the bottom left and go to the top right. You can be fairly certain it's going to be a decent day trading if that's happening. But when you look at your chart and they go up and they go down and they go up and maybe they're going down. If you have more than two of these lines on your chart, you're in a sideways market. Sideways markets are very difficult to trade. We're usually looking for, momentum. We're looking for to get on the buyers or sellers side. Yeah, good call, Jim. Jim says, finally profitable trade. He says, plus 18 for the day. Hey, at least it's in the black, right? Not in the red. Jim says, I'm going to go do yard work. This is too choppy. It is. It's very choppy day today. So now we're watching for the sellers. Here we're watching the sellers unwind. And we're looking to see how low the sellers can drive the market before the buyers step back in. And this may not be the best one to watch because crude oil is very, very quiet right now, which is very uncrude oil-like. You can't help it though on these sideways days. This is just how it goes. All right, so it looks like we've got the sellers trying to step in here, or pardon me, the buyers trying to step in here a little bit. So now the buyers are saying, okay, that's where we are. That's as low as we're prepared to go. maybe. The bar's not finished yet. And if we get the market coming up here now, we're going to get a trend change signal to the downside, providing this bar stays green. No, they're not going to do that. Well, we'll put this one on the shelf. But that's what we're looking for when the market is doing these types of things. Oh, looks like we missed a similar opportunity here in the NQ. Look at the fight between the buyers and the sellers. Sellers say, okay, we're up here. Buyers are saying, okay, we're down here. And we got a clue that the sellers were going to get stronger right here, where the sellers started to step up early, and they're forcing the buyers to buy, and the buyers stop buying, and then we head a little bit lower. But yes, it's a pretty choppy day today. What time is that FOMC, or the Fed, sorry? Let me see, where is it? Oh, I don't see it. Well, at any rate, there's something that's got the market rather sluggish. Yeah, Tony says that he doesn't find a meeting there either. I don't think it's an FOMC meeting. I think it's a Fed or something report. At any rate, it could even be just the lack of news is put the nix in for the stock market this morning, because it is very, very sideways. If we take a look at our trading range today, there we are, right in the middle of it. Just flip-flopping back and forth. Floyd says Fisher is speaking at 10. The markets are funny, you know. I met a friend last night, and he was inevitably, when we get together, he likes to talk about the stock market and whatnot. And he was saying, you know, all this talk about Oil is so cheap right now, and how it's hurting the economy and this, that, and the other thing. And I told him, it was just a year ago that oil was pushing 120 a barrel. Gas prices were through the roof at the pumps, and everybody was complaining that oil prices were too high and how it was hurting the economy. My point was the news always follows what happens in the markets. The news that we can get our hands on, we can't react to. The news that we read, it's already done. And they make the news fit whatever the market happens to be doing. And I think we're just seeing a little bit of that right now. Everything's just kind of going sideways. They're testing the top end. They're testing the bottom end. If they come back and retest the top end here for a third time, it's kind of hard to see here, but let's see, maybe it'll look better on the Eagle. If they keep retesting the top end, we're going to get a little bit of a wedge type formation going on here. If they get up here again and fail and head lower, usually a market will only retest a support or resistance area 3 times before giving up and going the other direction. So here we are, we're coming back up here to retest this resistance zone one more time. And if they can't get through it for a third time, there's a possibility they're going to try to go the other way. A good question, Peter. Peter asks, Erica, I've got the 3 birds and I'm looking at the Raptor. Do you or your fellow DTS users find it easier to look at one screen? In this sideways movement, I find the 3 birds at a disadvantage because of the many signals. Well, a lot of times I'll use the Raptor in conjunction with the other tools as well. By that I mean I'm looking at the Raptor to be in sync with the other signals I'm seeing. So for instance, here we're on a hard edge bounce here off of the Eagle, and I'm looking at the Raptor, and the Raptor is also bullish. The Hawk is bullish, the Falcon is bullish. So everything is in sync. If I was looking at this and the Raptor was bearish, then it would, cast a little bit of suspicion over the other signals. The thing you need to remember too, Peter, is that when the market is sideways like this, it's going to be difficult trading, really, no matter what your tool is. I think there is a little bit simplicity with the single screen system. That's what a lot of Raptor owners have told me, is they really like, it's clean. I only need to watch one chart. They do like that. But when the market's going sideways, the market's going sideways. There's not much you can do. In fact, when the market's going sideways, the tool that's going to serve you best is probably the hawk, because the signals are shorter term. But even here, you need to take the overall context of the day into account. As much as we want to, as traders, we can't make the market do anything. All we can do is try to take advantage of what the market is offering us. So here we are on the hawk, possibly working on a 4-arrow consolidation. I've got the warning dot. I know if the market finishes here at 42.50 quarter, I'm going to get a signal. That will be my 4th arrow. Maybe I'll throw a onesie in it because it's so sideways. Do I know the market's going to go up from here? No, not really. I am making a higher swing low. I do have a 4-arrow consolidation signal. See, 1, 2, 3 arrows. If the market trips the signal, I'll have arrow number 4. There it goes. And so I'm kind of trying to balance the probability of the trade against what's going on in the market. There we go. We hit the break even, and it got high enough to hit the profit target. Now, it may or may not give me enough follow through, given the current day's trading, to find the profit objective, say, on the Eagle, or even the Falcon for that matter, the Falcon and the Raptor. I may have to use tighter profit targets throughout. That was one reason why this morning on the Eagle trade that I did, I chose to take profit early. Oh, look at that. They would have come up a couple of ticks short. Because I delayed my entry a little bit on my signal, I came up a little bit short of my high probability target. So I just took the trade for what it gave me and just recognized that, hey, that's the kind of day it's going to be. And it's not always easy to see. When in doubt, trade less. If the market does not seem to be behaving itself, do your best to trade less. Okay, so here we are. We're hitting these highs again around the whole 42, 54, 55 area. Oh, no, the buyers are going straight on through. All right, so we're seeing a little bit of a rally. All right, well, we'll just let that settle in. Excuse me for just a moment. I'm going to be right back. So what did I miss? Not a whole lot from the looks of it. So here's that big rally, challenging the top end again of this resistance, broken through. Now we're going to look for a test and a retest type scenario. So whenever we get a breakout, we look for the market to retest the breakout and hopefully hold, in which case we'll get a buy signal. If this retest fails, we'll probably see the market retreat and maybe even head back into this trading range. So we're doing a lot of sitting around waiting for the players to show their hand this morning. Yeah, Ryman, you got the right idea. Ryman says, my trade day ends at 11 a.m. Eastern. I found no high probability trades today, no contract buys. Tomorrow is another day. That's really the best attitude to have. There are going to be days like this where the market's just going to be reluctant to give you a decent signal to trade. That's just how it goes. And there's nothing you can do. You just got to wait it out. But I think Ryman's got the right idea. If you're going to hang out this afternoon, well, the market is very sideways. I would be looking for this retest here to stick and the market to come back with a buy signal. You may not necessarily get it on the Eagle, but perhaps on the Falcon or the Hawk or the Raptor, you may get something tradable. If this retest fails, I would be looking for the sellers to once again drive the market back down here to the lows to around 42.40 and maybe even the lows of the day around here 42.30-ish. But it is, a slow day today, and I think we're just going to call it a day early and come back tomorrow and do this all over again. All right, you guys, so we'll see you tomorrow, and yeah, be careful. It's just one of those quiet days. Talk to you soon. Bye for now.